Hi, this is James Shrug with Westpac London's end of day report for Friday the 1st of March. Look, sentiment started off with a bit of a downward beat following somewhat disappointing Chinese factory PMI numbers. Yes, it's the time of year around the Lunar New Year, which means that the figures can be a bit distorted, but the overall interpretation was that they were somewhat disappointing survey results. And that was actually continued through with the UK factory PMI dipping quite sharply to, let's see, 47.9 from 50.5. That was its slowest in 4 months in February. The European factory PMI was revised up slightly from 47.8 to 47.9, with both the French and German numbers a little bit higher than previously reported. But we also had European unemployment figures hit a new all-time high of 11.9%. Of course, that ranges from around 5% in places like Germany and Austria to 26, 27% in places like Spain and Greece. The inflation figures for February, the flash estimate there was 1.8% for Euroland. That's its lowest since 2010, so you've got rising unemployment, falling inflation. And then we had the US data flow come in. We saw a sharp drop in personal income in the month of January. That just reversed the December rise, which was related to the early payment of bonuses and dividends by firms to try and beat the anticipated fiscal cliff tax hikes. But so that wasn't a big surprise, but the underlying personal spending numbers really were just up barely at all, 0.2% in January, 0.1% in December. So despite the big swings on the income side, spending remained pretty subdued. The factory ISM index was pretty strong though. It was its highest since mid-2011. It came in at 54.2. But other data was somewhat weaker. Construction spending fell more than 2% in January, entirely driven by the non-residential side. The University of Michigan's Consumer Sentiment Index was revised up somewhat, but at 76.3 in February, it's still, at 77.6, it's still only recovered about half of the December fall in the subsequent readings for January and February. On Canadian GDP growth too, 0.6% annualised in the fourth quarter, down from 0.7 in the third quarter. That's the weakest back-to-back quarterly performance for the Canadian economy since the recession of 4 years ago. Still waiting to hear about the sequester. I've got to say that the Republicans and Democrats don't seem to be that enthusiastic about reaching a deal in the near term. It may take parks being closed and police being laid off and teachers being furloughed before we see political kickback sufficient to force some sort of deal to be reached, if indeed a deal is going to be reached. But certainly nothing coming through as I speak late afternoon in London. So given all of that, most of the markets are a bit weaker today with I haven't got it in front of me, but the bias towards European trading was heading into the close was for losses in every market except for the London market, which managed to put on about a 0.25% rise in late trading, pretty much related to the better than expected ISM factory survey. Wall Street's currently down modestly ahead of any announcement about the sequester, with the data on factory ISM not particularly strong enough to push the market overall into positive territory. On the commodity side of things, we've got copper prices down 1.2% at the moment. Gold's down down 0.05%, so effectively flat at $1,577 an ounce, and oil prices are down 1.3% at $90.83 a barrel. The Aussie dollar's at 1.021 against the US dollar. It's down a little bit from where it was trading prior to the Chinese PMI data in the Asian trading session. We've got the Australian GDP numbers for the fourth quarter coming up next week. We've got the Reserve Bank decision, and of course the Bank of England and ECB and Bank of Canada as well, and US non-farm payrolls figures. So lots to offer direction to markets for next week, and of course maybe some resolution of the spending cut issue in the US, and maybe some Italian political developments too to watch for. So until then, I'll be signing off for this week. Okay, take care. Speak to you next week.